Hello and welcome to this week's update. So on Friday, we saw a big upside surprise for the July jobs report. They added 528,000 jobs in July, which is well above the expectation of 250,000. So certainly a big move up, and this surprise in the US jobs report lifts the employment back to pre-COVID levels. Now, you would expect that to be positive news and the markets to have an incredible move higher. Well, we can see that we were pretty flat, right? Didn't really do much at all. The Russell was up a little bit, but nothing significant. And if we look here at the SPX, we can see it did fail at this pivot high here, here, and here. So that was a pivot level I was speaking about before. It certainly did respect that. So that's what we saw there. Now, the reason why we didn't see a big move up is because when you're adding jobs at that rate, that means that the Federal Reserve is likely to continue to raise rates, and that would more than likely cause the markets to fall. And that's what we saw a little bit on Friday. So that's the reason why, even with that news, we didn't get a big move up. Now, wasn't a huge amount of volume on the spiders anyway, even with that big jobs report, around 53, 55 million shares traded on the spiders approximately. And that shows that there's a lot of retail traders out there, right? Not so much institutional trading. This time of year, you're not getting a huge amount of institutional trading anyway. A lot of the big institutions are taking a bit of a break. But for me, I think, yes, we did have a great jobs report, right? No doubt about that, and I certainly understand that. But I think this is a little bit lagging, right? If you look at any of the reports going around, the major tech companies, Bitcoin mining companies, a whole range of different companies are laying people off in record levels, right? They're pulling back on hiring or laying people off. So I think what you'll start to see at the end of the year is these sort of numbers come through. So for me, I think we could see a bit of a pullback coming in sort of September, maybe October. But I think right now, just looking at the actual charts, we've got this pivot high here on the SPX. So certainly that's one thing. But then on the QQQ, again, like I spoke about last week, we have this downward trend line here. Now, we've got this pivot here that it did take out, but then I said it could come up and hit this downward trend line here, which it has, and it's failed at that point. So I'm looking for this to have a bit of a pullback. So that's something certainly that I'm expecting. Now, I've got a Microsoft bearish spread trade on here with put debit spread. It did take out that downward trend line only slightly and now just closed back down below it. So I'll be keeping an eye on that to see if we do continue to pull back. As far as our SPX goes and our opening range on the SPX, should I say, we are now neutral. Okay, so these are the numbers to write down. Anything above 4145, and we are in bullish opening range mode. Anything below 4096 on the daily chart on the SPX, those two numbers will indicate bearishness, below 4096 or above 4145. So keep an eye on that. But right now we are neutral, right? Obviously. So we will keep an eye on that. Now, as far as what is happening this week, we've got CPI coming up on Wednesday, so inflation. Obviously, a lot of people will be looking at that, right? That is obviously the number one criteria that the Fed is using as to whether they continue to raise rates or not. Now, I think we could see a raise of rates in September, maybe 0.5%, something like that. But I think going into the midterm elections, they're probably going to not raise rates. That's normally in November, middle of November, I think. So I don't think we'll see another rate rise after September until after the midterm election's done. The Fed doesn't want to raise or cut rates in that time right before the midterm because they could then interfere with the result, either positively or negatively, depending on which party you're going for. So they would probably steer clear of it, is my guess, right? That would be my best educated guess. So we'll see. But for me, I think a little bit of a pullback from here, but I'm going to let the opening range dictate that, right? No one knows for sure. I'm going to look at the numbers and determine where we are likely to go from here, right? I'm going to let the trade, or let the chart, should I say, tell me, right? Price action is the truth. I trade what I see, not what I want it to be, and the market will tell me. But that's just my educated guess as to what will more than likely happen. No rate rises after September till the the midterms are finished, and probably a pullback in the market in September or maybe October. So they're my thoughts on the market. Now, as far as what's going on with a couple of our trades, let's have a look here. Tesla has had a nice move up. Now, I did warn my members that, look, this 200-day moving average is right here around 900. Okay, that's round number resistance as well. I think we could struggle at that level, especially after such a significant move higher. Okay, a little bit overextended, and we did pull back. Right, we're down around $61 on Friday, so this is perfectly normal after a big move up like that. But looking at a particular position that we've got on in Tesla, which is a covered call. It started out as a cash secured put option. We then owned 100 shares and we've turned it into a covered call. Now, just to show you the power and versatility of options, and this is something that I'm going to be talking about on Tuesday. I'm running a very important webinar. If you want to get access to this, I'll be running it in the evening and in the morning, right? 2 live sessions, and it'd be very, very important. I'm going to talk about the power and versatility of options, rolling options, which I'm about to talk about now, which can lock in profits, create riskless trades, none of your own money at risk. Also, it can turn losing trades into winners. Very important. I want to talk about strategies where I trade with no direction, right? Non-directional type trading strategies where you can turn as little as $10, $20 into 100 or 200, sometimes in a week. So very powerful asymmetrical opportunities that I want to make you aware of. We'll talk about leaps, longer term options, how you can make incredible money with those leading into stock splits, and even looking at massively undervalued stocks that have sold off recently with incredible growth prospects going forward, how to use leaps on those type of stocks to make incredible money as well. I want to talk about unusual option activity as well. That's very powerful. I think you'll get a lot out of that, how to read what the smart money is doing. And then I want to talk about when the market pulls back significantly, how do you make money from that? How do you prepare for that? How do you know when it's likely to happen? And then how you make money when things do rebound after a significant move down or a crash. These are some of the tactics that I employed in 2008, and setting up positions where you can make extraordinary money when the markets move back up again. That's what the billionaires of the world do. They wait for the markets to crash or correct significantly, then they go ahead and set up positions. I mean, think about this. If a stock, a good quality stock in a market crash falls from 100 down to 20, right? That's an 80% drop. Okay, it's a big drop. But if it goes back up from 20, from where it's crashed to, back up to 100, the pre-level before it crashed, that's a 500% gain. So the actual big money is actually made when things move up again after a crash, right? After they're significantly undervalued. So I want to talk about that as well, and how you can set up stock replacement options on those type of stocks to make incredible amounts of money as well. So there's a whole range of things that I'll be talking about. If you want access to that, I'll be talking about it, like I say, on Tuesday in the morning and in the evening. Send an email to support@cashflowoptions.com.au. Cashflowoptions with an S, all one word, .com.au, and they will send you the link to get access to that webinar. So back to Tesla. We have sold the 860 call. Now, right now, it's had a pullback below the 200, this is what I wrote last week to my members. Watch the 200-day simple moving average. It's now pulled back to around 864, as I just showed you. This gives us an opportunity right now. Now, we were agreeing to sell the stock at 860, and we had a break even or a cost basis of 842.92. Now, I don't want to sell it there. Even though it's going to be a profitable winning trade, I don't want to sell it there. So what I'm going to do is I'm going to buy back or close out the 860 call that I sold a few weeks ago. Okay, that's going to cost me $37.40. So I'm actually going to have a loss on that 860 strike call option I sold for August. However, what I'm going to do simultaneously is I'm going to sell the 880 call for the 16th of the 9th, September, next month's monthly expiry, for $56.05. So if I add back the cost of buying back the 860, then I subtract the income I'm getting for selling the 880 call, the premium, that will reduce my break even down to $824 from $842. So around $18 odd, I've reduced my break even. Not only have I reduced the break even on my cost basis by $18, but I've also increased my sale price by $20. So I'm significantly better off by doing that, right? So, really juicing that 100 shares that we own or multiples of to make considerably more money, right? So there's some of the things you can do when you really understand the power and versatility of options. So one of the things I'm going to be doing is setting up an Apple high return put debit spread. Now, because we're in a neutral opening range and I want to see if it does, the QQQ fails at that downward channel, that downward sloping channel line, or trend line, should I say, I'm just going to set up a very low risk trade, right? I'm risking only $100 here. So I'm going to buy the 170 put, sell the 165 put, the at the money. So buy the in the money 170, sell the at the money 165. Okay, right now Apple trading at 165.35. Now this will be for the 16th of the 9th expiry, 40 days from now. That will cost me $245 a contract. I would increase that in multiples of 5-cent increments up until 265. If you're not filled at 265, don't place the trade. Don't go beyond that. Now, a potential upside is 255, so 104% return on risk. But what we're going to do is we're going to set a stop here at 145. So I'm risking 100 to make potentially 245 per contract. So that's a trade that I'm setting up now. Not taking a lot of risk, just a small trade, looking for Apple to pull back after being significantly overbought, in my opinion. And if the QQQ, the money flow, pulls back, that should pull back Apple as well, and that is my reasoning. So I hope to see you guys on Tuesday. We've got 1,000 places. I believe we've got 100 left. So if you do want to get access to that, I would send an email very soon to get the link, and I will talk to you on Tuesday. All right, my friends, talk to you again on Tuesday or perhaps next week. All the best, and bye for now.